So welcome to all of you Shiksha 360. Today we will discuss basically first session on the MCQ discussion. Basically today we will discuss the miscellaneous MCQs, clear miscellaneous MCQs, that is basically not from any specific chapter, basically from different chapters. Basically that will also help us, clear, basically that will also help us in the examination also, clear. So the first question on our screen now, basically I request to all of you, please try to solve that question. Basically what the question says, that basically a company has total assets, clear. Basically the total assets of the company is 1,50,000 and its total liabilities are basically 50,000, clear. Basically a company has total assets as basically 1,50,000 and its total liabilities are basically 50,000. So based on the accounting equation, clear, basically based on this, basically we can assume that the total equity is 1 lakh, clear. Basically based on that, basically we will assume that the total equity is 1 lakh, clear. So next basically what we have to find, that find the debt ratio, clear. Basically find the debt ratio, clear. So basically here these types of question they will frequently ask in the examination, and there is not as such. Basically we have to remember, basically just we have to remember what is the formula of the debt ratio, clear. So what is the formula of the debt ratio? Basically the debt ratio is basically total liability upon total asset, clear. So what is debt ratio, clear? So basically what is debt ratio here is to be, basically debt ratio is to be total liability upon total asset. So basically how much is the total liability here is to be 50,000, and total liability, total assets here to be 1,50,000. So 4040, clear. Four zeros are cut out by 40. So here it is to be 1 by 3, clear. So debt ratio here comes out to be 1 by 3. 1 by 3 we can say that 0.33, clear. 1 by 3 basically we can say that 0.33. So option number A is the answer, clear. Option number A is the answer, clear. So basically here what they will ask, here they will ask only basically find the debt ratio, clear. Find the debt ratio. As we know that basically what is the formula of the debt ratio? Debt ratio is basically total liabilities upon total assets, clear. Basically what is debt ratio? Debt ratio is basically simply total liabilities upon total assets. Basically 50,000 upon 1,50,000, basically 1 by 3, basically we will get debt ratio is equal to 0.33, clear. So hope this question is clear to all of you. Now move towards the next question, clear. Now basically move towards the next question, question number 2. So basically question number 2, what it say that, clear. So basically as basically when we see that, basically it looks like very typical question, clear. But let's understand what they are saying, that basically Sheila's Tech Company is a tech startup company that manufactures a new tablet computer, clear. Basically it is a startup company. Basically what it manufactures, basically tablet computer. Sheila is currently, clear. Basically what Sheila is currently looking for new investors, clear. Basically Sheila is currently looking for new investor, basically for funding, and has a meeting with an angel investor, clear. And has a meeting with an angel investor. So the investor here, the investor wants to know how well Sheila uses her asset to produce sales, clear. Basically now why the investor invests? Basically first of all the investor basically knows basically how Sheila uses her assets to produce sales, clear. So he asks for her financial statements, clear. So he asks for her financial statements, clear. Basically which these things basically comes under the chapter number 27, clear. Basically which we have provided in the, which we have to provide it, clear. So basically Sheila uses her assets, clear. Sheila uses her assets to produce sales, clear. So he asks for her financial statements, clear. So here is what the financial statements reported, clear. So what are the beginning assets? Basically 50,000, ending assets basically 1 lakh, and net sales is 25,000, clear. So basically what they will give, basically beginning assets is 50,000, ending assets is 1 lakh, and net sales is 25,000, clear. So basically what they will ask, what is the total asset turnover ratio, clear. Basically for these types of questions you have to just remember what is the formula of total asset turnover ratio. So what is the formula of total asset turnover ratio? Basically it is equal to basically net sales, clear. So what is the formula? Basically net sales upon average total assets, clear. Net sales upon average total assets, clear. So basically what is the, now can anyone tell basically what is total asset turnover ratio? net sales. Clear? So how much is the net sale here is to be 25,000. Clear? So net sale here is to be 25,000. Clear? And what is the average total assets? Clear? Average of total assets basically. This one is 50,000. This one is 1 lakh. Clear? So 1 lakh 50,000 by 2. It is to be 75,000. So basically divided by 75,000. So it comes out to be basically 1 by 3. So the total asset turnover ratio here is to be 0.33. Clear? Basically total asset turnover ratio here is to be 0.33. Clear? Hope it is clear to all of you. Basically beginning assets is 50,000, ending assets is 1 lakh. Clear? So basically average assets basically 75,000. Clear? Average assets is basically of 75,000. So total asset turnover ratio is equal to TATR basically 25,000 upon 75,000. It comes out to basically 1 by 3. That is 0.33. Clear? So the answer, correct answer here is to be basically 0.33. Clear? So I think this question is clear to all of you. Basically ending, beginning, basically here what beginning basically means at the starting of the business until basically when they ask. Clear? Basically at that time. Clear? Basically at that time. Clear? Basically how much assets they have. Clear? Clear? At that time basically how much assets they have. Clear? So basically we have to take the average of both. Clear? Basically we have to take the average of both. Clear? Ending assets basically and the beginning assets. Clear? So 50,000 plus 1 lakh by 2. Clear? So basically here comes out to 25,000 upon 75,000, 1 by 3. Clear? So next question, basically this type of question we have, I think many of you have already studied in the class 9th or class 10th. Clear? Basically probability question. Clear? Basically they will ask these types of question also. Clear? This is very easy question, but we have to solve. Clear? But we have to try that. So basically our concept will be revised. Clear? So basically what they're saying that an urn contains, or basically we can say that a bowl contains. Clear? A bowl contains 10 black balls. Clear? Basically what they have in the bowl, 10 black balls and 5 white balls. Clear? And basically what we have to do, basically we have to draw 2 balls. Clear? And out of all that, basically we have to draw 2 balls are drawn from the urn, one after the other without replacement. Clear? So basically what we are saying that basically an urn contains 10 black balls and 5 white balls. Clear? Basically 2 balls are drawn. Clear? Here basically 2 balls are drawn from the urn, one after the another. Clear? Basically one after the another without replacement. Clear? Basically one after the another without the replacement. Clear? So what is the probability? Clear? So here what is the probability that both drawn are black? Clear? So basically what is the probability that both drawn are to be black? Clear? So here basically we will use the combination. Clear? Permutation combination. So what is the probability? Basically we have 10 balls and we have to draw 2 balls. Clear? And that are basically without replacement. Clear? So basically what we will do here, 10C2, and how many total balls? Clear? Basically 10 plus 5, 15. And basically we have to draw 2 balls, 15C2. So 10C2, basically how we can open this, 10 factorial upon 2 factorial into 8 factorial. Similarly, how we can open 15C2, 15 factorial upon 2 factorial into 13 factorial. So when we can solve this, basically 10 into 9 into 8 factorial upon 2 factorial into 8 factorial. Similarly, 15 into 14 into 13 factorial upon 13 factorial into 2 factorial. So we can cancel out this one by this one, this out by this one by this one. 10 into 9 upon 14 into 15. 5, 2, 5, 3. 1, 3. 1, 7. Clear? So basically here comes out to be 3 by 7. Clear? So answer is option number B. Clear? So here the answer is option number B. So clear? So what is the probability that both drawn are to be black? Clear? So what is the probability that the both drawn are to be black? That is basically 3 by 7. Clear? That is basically 3 by 7. So please tell fast. This question is clear to all of you or not? Please respond fast. Clear? Basically your participation is must here. Please respond. If you have any issue, any doubt in this question, then you can ask. Basically hope this question is clear to all of you, because these questions are easy. Clear? These questions are not that much typical. Clear? So now we'll move forward to the next question, question number 4. So please respond side by side also. Question number 4 is basically theoretical question. Clear? Basically, which of the following is not the layer in the data warehouse architecture? Clear? Basically, wants to, yes, basically balls are done one after the another. Clear? Basically, that is no replacement. Clear? That is basically here they are saying that basically no replacement. Clear? No replacement. So next one is question number 4. Basically, which of the following is not the layer in the data warehouse architecture? Clear? Basically, they are asking basically which of the following is not the layer. Clear? In the data warehouse architecture. Clear? First one is external database layer. Second one is metadata layer, data layer. Third one is data staging layer. Fourth one is none of this. Clear? Basically, fourth one is none of this. Clear? Which of the following is not the layer in data warehouse architecture? Clear? External database layer, metadata layer. Third one is data staging layer. Fourth one is none of this. Clear? So basically, the correct answer is to be none of these. Clear? So basically, the correct answer is to be none of these. Clear? Now move to the question number 5. Clear? Basically, we have already discussed these types of question 2 to 3 times, at least 2 to 3 times here. Clear? So I request all of you, please try to solve this question. Basically, if A invest rupees 100, clear? Basically, here what they're saying that basically if A invest rupees 100 at 7% interest rate, clear? Basically, for how many years? Basically, for 3 years, clear? So what will be the value at the end of the 3 years? Clear? So basically, what will be the value at the end of the 3 years? Clear? Basically, we have to calculate the future value is equal to present value into 1 plus r power n. Clear? So basically, what is the value of present value? Clear? Basically, presently we are investing 100 rupees. And what is the value of rate? Basically, 7%. Clear? So basically, 7 upon 100. And basically, for how many years? Basically, 3 years. Clear? So 100, this comes to basically 1.07 power 3. So when we are trying to solve, clear? Basically, when we are trying to solve this, basically 1.07 power 3 into 100, basically what we will get here? Please tell fast. Basically, when we are trying to solve this, 1.07 power 3. Clear? So basically, what we will get here, multiply by 100. Clear? So basically, when you are trying to solve this question, we will get basically 122.50. Clear? Basically, 122.50. Clear? So option number B is the answer here. Clear? Option number B is the answer here. Clear? Basically, just you have to remember, clear, what is the formula basically we have to implement. Clear? Even in the examination, basically, all questions are not that much typical. Basically, they want basically how much you remember. Clear? Basically, they will ask from the each chapter. Clear? Basically, they will ask questions from every chapter. So basically, you have to remember the concept. Clear? Here, basically, what you have to do, basically, you have to remember the concept and formulas. Clear? So next question, move towards the next question. Question number 5th, 6th. Clear? Question number 6. Hope I expect this question is easy for all of you. Clear? So basically, in Mcq code, how many digits are available? 13, 11, 10, 9. So please tell fast. Basically, in Mcq code, basically how many digits are available? Yes, many students are answering 13, 11, 10, 9. Clear? So basically, what is the full form of Mcq? Can anyone tell basically what is the full form of Mcq? MICR. Please tell fast what is the full form of Mcq and basically how many digits are available here. Clear? Basically, how many digits are available here? Mcq, basically magnetic ink character R for recognition. Clear? So Mcq code is basically magnetic ink character recognition. Clear? Basically, this code is present on the checks. So that is basically 9-digit code. Clear? It is basically 9-digit code. Clear? Basically, I will show you one image basically that I will take from the Google. Basically, that is basically it is a check of SBI. Clear? And basically, this is the account number. This is the check number. Clear? Which they have. This is the Mcq code. Clear? Basically, this is the Mcq code. It is basically up to 9. So basically, this is 9-digit. Clear? So Mcq code, it is basically 9-digit number. Clear? It is basically 9-digit number. Clear? And basically IFC code. There is one more IFC code. Clear? So IFC code is of how many digits? IFSC code is basically of how many digits? Please tell fast. And IFC code basically it is also 11-digit. And the 5th digit is always 0. Clear? 5th digit is a 0. Clear? IFC code is basically 11-digit and fifth digit is a 0 in the IFSC code. Clear? So now move to the next question, question number 7. This question basically they have asked 2 to 3 times. Clear? Basically 2 to 3 times. Basically they have already discussed this question, and we have already covered this in the chapter number. Basically, I think chapter number 12. Clear? Basically we have already covered this concept in the chapter number 12. So let's discuss that question. Basically, what it say that. Clear? Hope all of you are basically able to answer this question. Basically, question number 7 say that basically a loan for which only interest is paid during the repayment period. Clear? Basically, a loan on which for which only interest is paid during its repayment period, while the principal is repaid at the end. Clear? Basically, like we can say that if 7-year loan. Clear? So basically every year we pay the interest only. Clear? And at the end of the 7th period, or clear, basically at the end of the 7th period, basically we pay the whole principal amount. Clear? So that system is known as, clear, term loan, interest demand loan, lump sum payment loan, or balloon repayment loan. Clear? So that is basically known as the balloon repayment loan. Clear? So option number D is the answer. Clear? That system is basically known as the balloon repayment loan. Clear? That system is basically known as the balloon repayment loan. So option number D is the answer here. Now move to the question number 8. Clear? Now move to the question number 8 that we have covered basically in the last week also. Basically bond investment. Clear? So a basically 5-year bond with the coupon rate. Clear? Basically what is the coupon rate here is to be 8%, and the basically face value of the bond is 1000. Clear? So basically a 5-year bond with the coupon rate of 8% and the face value of rupees 1000. Clear? So what is the annual interest payment? Clear? So what is the annual interest payment? Basically 8% of the face value. So 8%, basically 8% of 1000. So basically that is 80 rupees. Clear? So option number A is the answer. What is the annual interest payment? That is 80 rupees. Clear? So option number A is the answer. Clear? Option number A is the answer. So 80 rupees is the annual interest payment. Clear? Or we can say that coupon value. Clear? Basically many times we can say this value is also known as the coupon value. Clear? So what is the annual interest payment or the coupon value is basically 8%. Clear? Coupon value is 80 rupees. Now move to the next question, question number 9. So easy question, theoretical question. So basically what they are saying that here, which of the following is a capitalist economy? Clear? Basically which of the following is a capitalist economy? England, China, India, none of this. Clear? Basically China is what type of economy? Can anyone tell? India is not a capitalist economy. So England here is the answer. Clear? England is the capitalist economy. India is a basically mixed economy. Clear? India has basically mixed economy. England has basically capitalist economy. Clear? England has basically capitalist economy. So now move forward to the question number 10. Basically who gave welfare theory of economics? Clear? Basically can anyone tell basically who gave welfare theory of economics? Clear? The first option is Alfred Marshall. Second option is Lionel Robbins. Third one is Adam Smith. Fourth one is none of this. Clear? Basically who gave welfare theory of economics? Basically the answer is Alfred Marshall. Clear? So option number A is the answer. Basically Alfred Marshall basically gives the welfare theory of economics. Clear? Basically who will give the welfare theory of economics? Basically Alfred Marshall basically gives the welfare theory of economics. Now move to the question number 11. Very, very easy question. Clear? Economic sector reforms. Clear? Basically economic sector reforms were started in India. Basically when? In which year? Clear? Basically economic sector reforms basically started in India. Basically in which year? Clear? 1983, 1985, 1991, 1981. Clear? So basically they are started in the year 1991. Clear? So option number C is the answer. Clear? Economic sector reforms basically were started in India in the year 1991. Clear? So basically this is the answer. Clear? Now move to the question number 12. Basically that is formula based question, and I request all of you please understand basically what they are saying that. Clear? Basically question number 12. So basically you are receiving, clear, what they are saying that basically you are receiving rupees 10,000 every year. Clear? Basically for the next 5 years. Basically when you are receiving 10,000 basically at the end of the period. Clear? At the end of the period basically we are using the annuity due. If we are receiving at the starting, then basically ordinary annuity, and here basically at the end of the year basically we can say that the annuity due. Clear? And you invest each payment at 5%. Clear? And further basically how much basically we are investing that money basically at the 5% interest rate. Clear? So basically, how much would you have at the end of 5 years? Clear? Basically, definitely you will get basically more than 50,000. Clear? Definitely you will get basically more than 50,000, but how much more than 50,000? Clear? So basically, when we are seeing the options, basically all are 55,000 plus. Clear? All options are to be 55,000 plus. Clear? So basically, what is the future value? Future value here is equal to T upon R into 1 plus R power T minus 1. Clear? So this is the formula. Clear? Basically, how much? So basically, what we are getting at the starting, basically 10,000. R is equal to 0.05. Clear? Because it is 5%. So 5 upon 100. Clear? 5 upon 100. So it comes out to be 0.05. 1 plus 0.05. How much power here is to be? 5 minus 1. So basically, it comes out to be 10,000 upon 0.05 into 1.05 power 5 minus 1. Clear? So basically, when you are trying to solve this question on the calculator, clear? Basically, when you are trying to solve this question on the calculator, so can anyone have the calculator now? Please type basically what is the answer here. Basically, 10,000 upon 0.05 multiplied by 1.05 power 5 minus 1. Clear? So basically, when we are going to calculate, basically how much amount basically we will 55,256. Clear? Basically 55,256 rupees. That is option number D. Clear? That is option number D is the answer here. Clear? 55,256 rupees. Clear? So basically, this question is already asked in the year 2018. Here, basically, this is also the previous year question. Basically, this question they have asked in the year 2018. Clear? Hope these questions are clear to all of you. Now move to the next question. Basically, next question, basically, we have already discussed basically business cycle. Clear? Basically, in which phase of the business cycle unemployment will be the widespread? Clear? Basically, in which phase of the business cycle basically unemployed will be the widespread? Clear? Will be widespread. Recession, depression, recovery, boom. Clear? So what we have to recession, depression, recovery, or boom. Clear? Basically, who have attended and read the basically attended basically or watched this session, basically they know basically that session is the phase. Clear? Recession is the phase of the business cycle basically where unemployment will be widespread. Clear? Basically recession will be the phase of the business cycle where unemployment will be widespread. Clear? So I request to other students basically who are not able to answer this question, please go through the video. Clear? Basically please go through the video. This is basically one video only of the business cycle, and they will definitely ask 2 to 3 questions basically from that chapter. Clear? Basically 2 to 3 questions, and basically what you have to understand basically these 4 points. Clear? Basically these 4 points are just cover under the business cycle, and they will definitely ask 2 to 3 marks questions from that. Clear? Recession, depression, recovery, boom. Clear? So basically in the recession phase of business cycle unemployment will be widespread. Clear? Unemployment will be widespread. Clear? Next question here is, so what are the factors of production? So basically factors of production are categorized into how many categories? Clear? 2, 3, 4, 5. So please tell fast. Basically factors of production. Clear? Basically factors of production are categorized into how many categories? 2 categories, 3 categories, 4 categories, 5 categories. Clear? So if anyone tell basically what is the answer, so please tell also basically which of the following are these categories. Clear? Basically factors of production are categorized into basically 4 categories. Clear? Basically they are divided into 4 categories. So what is the categories? Yes, first one is the land, labor, capital, entrepreneur. Clear? So basically these are the 4 categories basically. So let's discuss. Basically there are 4 factors of production: land, labor, capital, entrepreneurship. Clear? Land, labor, capital, entrepreneurship. Clear? So hope this question is clear to all of you. Basically what are the factors of production? Basically factors of production are categorized into 4 categories: land, labor, capital, entrepreneur. Clear? So option number C is the answer. Basically 4 categories. Now move towards the question number 15. Basically what is the question? So yes, basically some students are also basically, so basically the short one is CEL, CELL. Clear? Capital, entrepreneur, land, labor. Clear? You can also remember this way. Clear? Basically this is very straightforward questions basically. Clear? For the examination. Clear? Now move towards the question number 15. Clear? So demand schedule. Clear? This question they have already asked 2 to 3 times also. Clear? Basically these are the pet questions of the examination. Clear? Basically demand schedule. So what is demand schedule? Clear? Basically, it is a relationship between demand and quantity bought. Second one is the relationship between price and the quantity bought. Third one, it is basically the price and the demand. Clear? Relationship between the price and the demand. Fourth one, it is basically none of this. Clear? None of this. Clear? So what is the demand schedule? Clear? What is basically the demand schedule? Basically, it is a relationship between price and quantity bought. Clear? Clear? Basically, what is the demand schedule? Basically, not demand and quantity bought, is basically the price and the quantity bought. Clear? So basically, relationship between price and the quantity bought, it is basically known as a demand schedule. So option number B is the answer. Clear? So option number B is the answer. Demand schedule is what? Basically, it is a relationship between the price and the quantity bought. Now move towards the question number 16. Clear? Now move towards the question number 16. A market equilibrium. Clear? Basically, when market equilibrium comes, clear? A market equilibrium comes at the price. Clear? A market equilibrium basically comes at the price at which quantity demanded is equal to basically quantity produced, supplied in inventory or in stock. Clear? Basically, market equilibrium. Basically, when the quantity demanded is equal to basically quantity supplied. Clear? Basically, we have already done numerical discussion on that also. Clear? So basically, option number B is the answer. Clear? A market equilibrium basically comes at the price at which the quantity demanded is equal to basically the quantity supplied. Clear? So option number B is the answer here. Clear? So market equilibrium basically comes at the price at which the quantity demanded is equal to basically the quantity supplied. Clear? Quantity demanded is equal to basically quantity supplied. That is basically known as the market equilibrium. Now move toward the question number 17. Clear? Now move toward the question number 17. What they say that basically the central limit theorem. Clear? Basically the central limit theorem. So regarding that, the central limit theorem basically assures us that the sampling distribution of the mean. Clear? So basically what it assures that the sampling distribution of the mean, it is basically is always normal for large sample sizes, approaches normality as sample sizes increases, or D option is approaches normal only when n is greater than 1000. Clear? Or D option is basically approaches normal only basically when n is greater than 1000. Clear? Basically when n is greater than 1000. Clear? So what is the answer here? The central limit theorem assures us that the sampling distribution of the mean. Clear? That the sampling distribution of the mean is always normal for large sample sizes, approaches normality as the sample size increases, and appears normal only when n is greater than 1000. Clear? Basically when n is greater than 1000. Clear? So what is the answer? Basically it is always normal. Clear? The central limit theorem assures us that the sampling distribution of the mean is always normal for large sample sizes. Clear? Basically which we have already covered in the session video discussion, basically in the small box form. Clear? Basically in the box basically we have discussed that is it is normal basically for the large sample sizes. Clear? The central limit theorem shows us that the sampling distribution of the mean is always normal basically for the large sample sizes. Clear? It is always normal basically for what? For the large sample sizes. Clear? Now move towards the question number 18. That is basically numerical based question. Clear? Numerical based question. Clear? Question number 18, what it says that effective annual interest rate. Clear? Basically we have already discussed the formula of that. What is the effective annual interest rate? Clear? So a quarterly repayment of a loan. Clear? Basically a quarterly repayment of a loan carry an interest rate of 8% per annum. Clear? So what is the effective annual interest rate? Clear? Basically a quarterly repayment of a loan carry an interest rate of 8% per annum. Clear? So what is the effective annual interest rate? So effective annual interest rate is to be what is the effective annual interest rate? It is equal to basically 1 plus R upon N power N minus 1. So what is the R basically? R here is to be 8. N is the basically number of times. Clear? Basically number of times we have to, basically it is 4. Quarterly basically means that 4 upon 4 minus 1. So basically 1 upon 2, and it has to be divided by 100 also. Why? Basically it is 8%. Clear? 8 upon 100. Clear? So 1 plus 2 upon 100 power 4 minus 1. So 1 plus 0.02 power 4 minus 1. Clear? Basically when we are trying to solve this, basically we will get here 0.082. Clear? So what is the interest rate? That is to basically in percentage. So basically 0.082 multiply by 100. So basically we will get here 8.2%. Clear? So basically we will get here 8.2%. Clear? So basically answer is option number B. 8.2%. Clear? So basically, what is the effective annual rate? Annual interest rate is equal to 1 plus R by n power n minus 1. Clear? So what will we get in the answer? Basically, we have to multiply by 100 because we have to represent it. It is basically in the form of percentage. Clear? Because we have to represent it in the form of percentage. Clear? Now move for the question number 19. Clear? So seasonal variation. So seasonal variation is basically repetitive, predictable, both A and B, D, none of the above. So what is the answer? Seasonal variation, it is to be repetitive, predictable, both A and B, D, none of the these. So basically seasonal variation, we can know that basically it is repetitive. Clear? Because every year it is to be repeated. Like we can say that basically tourists in the hill stations, basically they will move either in the summer or in the winter season. Clear? Basically we can say that. So basically that is basically repetitive, and it is also predictable. Clear? Because we know that basically every year they will that go there. Clear? So basically correct answer is option number C, that is both A and B. Clear? That is basically both A and B. Clear? So B and these two words, repetitive and predictability. Clear? They have also mentioned in the definition of the seasonal variation. Clear? They have also mentioned this. Clear? Directly straightforward these words in the definition also. Clear? Basically in the definition also. So basically repetitive and predictable. Clear? So option number C is the answer. Clear? Option number C is the answer here. Both A and B basically repetitive and predictable. So question number 20 here is to basically the probability that we associate with an interval estimate is called. Clear? The probability that we associate with an interval estimate, it is basically called as the probability that we associate with an interval estimate. It is basically called as estimate level, confidence level, probability level, D, none of the above. Clear? So that is basically known as the confidence level. Clear? That is basically known as the confidence level. Clear? So the probability that we associate with an interval estimate, it is basically called as confidence level. Clear? It is basically called as confidence level. Clear? So option number B is the answer. Clear? So next question number 21, basically we have already covered this question, same question. Basically when the chicken prices rises by 30%. Clear? Basically here they are saying that basically when the chicken prices are basically rises by 30%, the quantity of KFC, not KYC, basically it is KFC. The quantity of KFC fried chicken supplies rises by 15%. Clear? Basically when the prices rises by 30%, quantity rise only by 15%. Clear? So calculate the price elasticity. Clear? Basically how we can calculate the price elasticity. Clear? So basically price elasticity, basically we can calculate percentage change in quantity supplied. Clear? Percentage change in quantity supplied upon percentage change in price. So what is the percentage change in quantity supplied? Basically here 15%, and percentage in price is 30%. Clear? So basically 1 by 2, basically we will get 0.5 answer. Clear? So basically we will get 0.50 the answer. That is basically the price elasticity of the supply. Clear? That is basically known as the price elasticity of the supply, that is 0.50. Clear? Now move towards the next question, question number 22. So basically in the random sampling, clear? Basically in the random sampling, basically we pick up one. Clear? In the random sampling, basically we pick up one, we note it down. Clear? Basically we note it down and put it back with the remaining and pick the next one. Clear? So basically in the random sampling, basically what we do, sampling, basically we pick up one, we note it down and put it back with the remaining. Clear? And pick the next one. So basically this is called sampling with the replacement, simple random sampling, sampling without replacement, none of the above. Clear? So basically here we are doing the replacement. So this option is not the answer. This is also not. Clear? So basically what they are doing, we are doing here sampling with the replacement. Clear? Sampling with the replacement. Clear? That is basically we are saying that put it back. Clear? First of all we pick, then we will put it back. Clear? So that is basically we are doing the replacement. Clear? So option number A is the answer, basically sampling with the replacement. Clear? If we are put it pick up and we are not putting it back, that is without replacement. Clear? That is without replacement. But here we will put it back. Clear? So that is with the replacement. So option number A is the answer. Clear? Option number A is the answer. Clear? Now move to the last question of our today's session. Basically the cabin of a bank branch manager giving an untidy look. Clear? Basically giving not good look and a messy appearance. Clear? And a messy appearance. Clear? So his table is full of papers. He is exhibiting. Clear? So the cabin of a bank manager basically gives a untidy look and a messy appearance. His table is full of papers. Clear? So he is exhibiting. type A behavior or type B behavior. Clear? So let's discuss what are type A and type B. Clear? So basically, based on the personality, clear, basically people can be bifurcated. Clear, basically based on the personality, people can be bifurcated into two categories, that is type A personality and type B personality. Clear? Basically, it is the most common individual level stressor and explains two different types of personality. Clear? Basically, it is the most common individual level stressor and explains two different types of personality. Clear? Basically, these are known to influence the possibility of an individual. Clear? Basically, these are known to influence the possibility of an individual acquiring health related problems. Clear? Individuals acquiring health related problems like heart ailments. Clear? So basically, what are type A? Type A people are basically highly competitive, self critical. They continuously strive for goals without paying much attention to efforts and accomplishments. Clear? Basically, they strive for goals without paying much attention to efforts and accomplishments. Clear? Basically, on the other extreme, type B individual are basically usually more tolerant, relaxed, reflective than type A. Clear? Reflective than type A. Clear? So basically, as per the question, they are saying that basically the cabin of a bank manager basically gives an untidy look and a messy appearance, basically confusing and basically clear. So his table is full of papers also. So he is expecting type A behavior or type B behavior. Basically, he is expecting type A behavior. Clear. So A is the answer. Clear. Basically, it shows not looked relaxed. Clear. It shows not looked relaxed here. Clear. Basically, by explaining the condition here. Clear, or by reading the condition here. Clear. So option number A is the answer. Only one. Clear. Option number A is the answer. Only one. Clear. So this is the answer. Clear. So basically, in this session, we have to discuss up to this much question. Clear. Question number, in this session we have covered 23 questions. Clear? So I request to all of you, please watch the video once again and try to understand basically all these questions. Clear? Try to understand all these questions. In the next session, basically we will discuss 23 to 25 questions more. Clear? Basically we will discuss in this way. So basically it is easy for you to remember also. Clear? Basically it is easy for you basically how they will ask question in the examination. Clear? So thanks to all of you for watching this session.